In 1971, the president at the time, Richard Nixon, is that his name? Dick Nixon? All right, Dickie. Dickie took the US off the gold standard and the world off the gold standard. And we were having a conversation here about how many people we thought actually understood what happened in 1971 when he made that announcement. Maybe we'll get Forrest to do impersonation of him again. But he suspended the ability to convert dollars into gold, and the dollars were no longer backed by gold. And so we're going to look at the chart from 1971. You're not going to believe what the price of gold was in 1971. And we just recently hit an all-time high of 4,200 per ounce. So, Forrest, let's start with that chart, and then we'll discuss.
So it happened in August of 71. Is that correct? Yeah, August.
Yes.
So right here, which was actually a red month for gold. And I was kind of like theorizing a little bit, like, we pay attention to the months and stuff with Bitcoin's price, and people say that, the fund managers and a lot of the big money are on vacation for the summer. They're up at Cape Cod and the Hamptons and everything. So, yeah, I don't, there was probably lower liquidity and lower interest. And I really wonder how, exactly, like how significant, like it's that speech of Nixon is so significant now, especially as Bitcoiners and sound money advocates. But like, I don't know if people really recognized the severity of it right away. You can see, sorry, go ahead.
I was just going to say, what percentage, if you guys had to like pick a percentage of people of the population who actually understood what he was saying and actually understood what the implications of that would be? I would guess it'd be less than 1% of people.
Yeah.
Very low.
Yeah, I'd say very low. I don't even think most people understand it today.
Yeah,
exactly. 50 years later.
And also he said, we're temporarily going to suspend the redeemability of US dollars for gold. And this was like a foreign nation thing because speculators were attacking the US dollar. It's like, so
you actually sound like him. Funny.
Americans couldn't even redeem bills for gold before then. So it was really only foreign holders of dollars that held US gold reserves. So anyway, like, it kind of traded sideways, but kind of starting to go up, and then massive monthly candles here in 72 in May. And I think that actually looking at like GDP and growth, there was actually like a spike in growth immediately after as well, which to me shows, again, evidence that people didn't recognize what was happening, because all of a sudden there's just easy money, and that goes, some of that debasement goes into the GDP growth, and people aren't recognizing yet. Like there would be a massive lag because they hadn't seen this happen to this degree. There would be a massive lag between understanding, okay, the money's actually going down in value. And they're, of course, a massive percent, 99% still don't understand that, right? That the value of things is not going up. The cost of it is going up, priced in a denominator that's going down in value. But then basically gold went on a tear. Like, this is all monthly candles. The sound money trade, like you can look at the size of these candles, right? Wow. Like it went up, it went down, but in no size, in no volume. And then immediately, like this is 71 right here, and the candles start getting bigger on average. The price movements start getting more intense to the upside and the downside. And it starts to look like a meme coin. Like it just starts going nuts, right? And yeah, what was the price at? 35 an ounce. This is all
traded down for a while there.
Yeah, and so that would be into
it
the
was down for
90s.
Like 20 years, 25 years. Wow.
The lost decades of gold, investors, for sure. I mean,
does that have something to do with like the tech stuff happening around that time?
Yeah, maybe, just more favorable conditions for investing in the markets, more ability to do so. People saying like, not explicitly, but probably saying like this is or understanding, oh, we can invest in companies that have cash flows and these will appreciate from inflation as well, instead of a non-cash flowing asset like gold. I don't know. But then after, so again, in 25, you know what happened? Or sorry, in 2005, what happened here is an ETF launch of GLD.
Oh,
wow.
yeah. I
And look
was
at
actually
that.
going to ask when was GLD?
Yeah, 2005.
Wow.
Which is right here basically, sometime in 2005. And since then, it has been nonstop. But again, another little decade, or let's see, since a moderate low here, 2013 to 2019, sideways action. So gold does that. It's pretty weird. Like Bitcoin does that too, but it seems to do it for like months or
a year
at most.
That's because gold is just so much slower in every way, right? You can't move
Yeah.
it around as easily. It
Right.
takes a lot more time to really discover if there's some kind of scam going on. Let's say, for example, if Fort Knox actually has no gold or it has way more gold than we expect, it's going to take 18 months. So that 18 months is just dragging along and dragging along. Whereas with
True.
Bitcoin, because it's digital, it's just like everything else, right? If you wanted to buy something from Walmart, you'd have to go there and you have to go get it. But you go on Amazon, you just order it, you have it delivered the very next day, right? If
I
you
think you're right.
like it, and then what Bitcoin does is it makes it so that the discovery process of any scams are so much faster. It's like with FTX, for example. If FTX was like a gold exchange, it would have probably taken till like 2050 to discover it's a scam, right? But with Bitcoin, because the information spreads so quickly on social media and because it's digital and because people can take self custody within minutes, that was discovered very, very quickly. It was discovered very, very quickly that FTX is a scam, and that's exactly what's happening with this. So with Bitcoin, with those 4-year cycles, um, I guess it wipes out everything that's bullshit very fast. Whereas with gold, you can't really figure it out until you actually want self custody, and that could take a really long time to do. Even with even actually just earlier this year, I saw something where uh, in London, settlement was taking like a month and a half for gold, which is wild, right? If that happened in Bitcoin, that exchange would collapse immediately.
Yeah. Yeah, I mean, it's crazy when it takes an hour to get a confirmation, right? When there's
Yeah,
a backlog and the miners aren't, hitting a block and stuff like that's congestion on the network, and that it clears up pretty quickly. But yeah, to take physical, yeah. So there's a lot of things there. Like basically, to sum it up, though, like Bitcoin is way faster in a lot of ways in the verifiability, in the transport, in the self custody, everything. So yeah, if there is paper Bitcoin, it gets found out way sooner than if there was in some semblance paper gold, which there
yeah,
could totally be, right? Um, and then so what's funny about that is like you're saying like it's way slower, and it's true, but then there's this massive parabolic rise that we're seeing. So if gold is slower than Bitcoin and gold is catching this bid, like
yeah.
what does that mean for Bitcoin, right? Like it's crazy.
Yeah.
And this all happened recently, right? So bottom here in 2023, and so we're up 132%
Wow.
in 2 years essentially since the bottom, but more so like since the real raising in price, it's been that started essentially here in March 2024. Massive amount of green candles, which is unlike anything you can see. Like this is almost the banana zone here. Like it's going to start curling backwards almost, it looks like, which you don't see anywhere else in gold's history. So this kind of gets into that idea, the phrase that's been coined, like the debasement trade. People may be recognizing that this is a sovereign asset with history, that cannot be debased. No government can print more gold. They have to go out and extract it, refine it, store it. There's a real cost to production with gold. And that's the same with some other assets, right? So people are talking about silver in the debasement trade. Again, same aspects to some degree, and of course Bitcoin. And
I was actually gonna say, the Bitcoin is, I mean, gold is a little different though compared to Bitcoin, because with gold, at any time there could be more supply added to the market, right? And then gold is so widely distributed that a massive number of people can start selling their gold. Whereas with Bitcoin, there's a very limited number of people who have it, and if they start selling, their their supply is being taken out of the market immediately, because there are so many people who don't have Bitcoin yet. Like 99% of the world probably doesn't have Bitcoin or any significant amount, probably 99.5% or more. Whereas with gold, there's probably entire countries that have maybe 50% or more gold holders, because there's nothing else to save in. And gold has been around for 6,000 years, right? I mean, I actually, I think that, I mean, I don't know, maybe I'm wrong on this. This could be the worst call ever, but I think that gold will probably start pulling back at some point, because if you take a look at this price, it doesn't really seem very realistic. Because if the price goes up way too high, it'll become easier and easier for okay. So there's research on, let's say, under the oceans. There's a lot of gold there, and at a certain price, it'll be profitable to take that gold out and sell it into the market.
Eventually supply meets demand in gold.
Eventually, yeah.
And that's something
demand probably will slow to some degree as well.
Yep.
Yeah. Yep. But that's the difference in Bitcoin and gold. Like, they have such similar characteristics. Obviously, Bitcoin is the new age version of it. It moves faster. It's more verifiable. There's a ton of reasons why Bitcoin is superior to gold in my eyes. But the point here is, I think that when you look at a comparison chart, and we showed this on the show last week, between Bitcoin and gold, and one of the categories is like scarcity, and they both have the check mark there. Mm-hmm. But again, Bitcoin is absolutely scarce. Gold is pretty scarce. And you can't just compare the two with a check mark there. Those are two very different characteristics there, like absolute scarcity versus pretty scarce. And so I think that, you might be right, Rajat, you might be wrong, but I think what it comes back to here for me is, like, since 1971, when gold was trading for $35 per ounce, it has 100x'd since then. Since the 70s, gold hasn't improved. Like, it's not like it's more functional than it was. It's not, it's just the fact that the fiat dollar is collapsing. For an asset like gold, which is essentially a flight away from the dollar, if somebody wants to store their value, they hold it in gold. So that's like essentially the dollar in 50 years, because gold has gone up 100x. That means that fiat, on the flip side of that, is like worth 0 to 1% of what it was in 1971. And so I don't know if it's going to go up or down. I think both Bitcoin and gold are just going to continue to go up personally. But that doesn't mean it's actually like getting better. It doesn't mean that there's actually more people holding it. It just means that the dollar is losing more and more value every day. And I think that Bitcoin, on the other side of this, has much further to go for those reasons, in the sense that nobody really understands this yet. It's been 50 years since Nixon took the US off the gold standard. And I bet if you asked 100 people on the street, what's the dollar backed by, probably half of them or more would still probably say gold.
Yeah. And there's that idea that an ounce of gold is worth a fine man's suit, because both those things are difficult to create even today, right? Like, a fine man's suit is not a clanker can't just spit it out, right? Like, you're going to need a human doing some tailoring, fine tuning, a lot of that stuff, right? So it's still difficult to create that. So if that concept remains true, even with this parabolic rise, then Jor's right. Gold hasn't gotten any better. It's not any more valuable, except that the value that is being ascribed to it right now is the understanding that the dollar is weakening. So the value is holding something that cannot be debased.
It's almost like a placeholder for something better.
Exactly. And so with that, what ends up being better, right? These are massive profits, especially for gold holders, right? What do they rotate into when gold stops going parabolic, right? It might nominally continue to go up, but maybe it'll go up like how it used to. Like, it'll trade sideways for a bit. It'll be a little grind up. When that happens, people start getting bored. What happens when these red candles happen? That's people selling the profits that they've made. And what will they rotate into, right? They'll be... Sorry?
Can I share my screen? Sorry. Go ahead with what you're saying. I just want to share. I want to show something, because I think it helps your point. It really helps your point, because like, people think that, gold has or Bitcoin is going to have diminishing returns. But if gold is up so much, then Bitcoin is going to go up way more, because it's a smaller asset.
Yeah.
Right. Like, if you take a look at gold's returns, it's up 7% per year over the last 14 years, 10% per year. 13% year per year in the last 10 years. And this number is steadily going up, and it's actually accelerating.
That's crazy.
Right? It's accelerating. That's the craziest part. It keeps growing because more and more people are discovering it.
Look at the S&P. It's almost like it's just going up at the amount that they're printing more money.
It is.
This seems like it's controlled. It almost seems fake.
Yeah. Yeah, like what? 12%, 12%, 12%, 13, 13, 13. Like what? That's crazy.
Yeah. These are the compound annual growth rates. So like it's been controlled to stay at 12 to 13%.
Yeah, that seems really strange, right? Actually.
It seems almost rigged. Like if you look at SPY.
You seem surprised about that, Rajat. You seem surprised about that discovery.
I'm a little surprised at those exact numbers.
I'm surprised that people haven't noticed this.
Yeah.
Like we keep, I've talked about this before, but it almost feels like if you aren't like people, okay, so most people don't want to buy index funds. They don't want to buy stocks. They don't want to buy any investments. They think that they're a scam. But like I said, this is like, it's rigged to go up. So if this is going up and it's rigged to go up, then how much will Bitcoin go up if there's no control over it? Like nobody has any power over it. Nobody can stop it. If gold can rise, so gold is a $26 trillion asset and it's up like 60% in the last year. People think that Bitcoin is going to have diminishing returns. Like this is one of the best years for gold ever since 6,000 years ago.
Yeah.
Right?
Yeah, it's subjected, like the returns are subjected to why it's in demand. And the reason that one of the reasons that Bitcoin has so much value is that it's an asset that you can easily take custody of, that no one can create more of. And it beats out gold on the idea that we've talked about already, where if gold is at this level, I guarantee there's companies all thinking, okay, we need to hire people to go find more gold reserves. We need to fire up miners. Let's get the excavators out. Let's start going hard on acquiring more gold. The same people or the similar type of people, but in Bitcoin, are thinking, okay, Bitcoin's price is going absolutely crazy. It's above 100,000. We need to get some hash on the network. The two differences between that is the miners of gold will increase the supply when they increase production. The miners of Bitcoin, when they put more hash rate, they are not increasing the amount of Bitcoin hitting the network. It's the same, right? Every roughly 10 minutes, because of the difficulty adjustment, every roughly 10 minutes, the same amount of Bitcoin is released until the next halving. And then it actually decreases programmatically. So, so that's the idea here, right? Is like the value proposition of Bitcoin goes up and becomes more easily understandable when the denominator, the US dollar, decreases in value. And that's what's happening. And people are recognizing that and buying gold. And I actually don't know how many people are buying gold. I think it's actually large institutions and banks, specifically probably in the Eastern Hemisphere, or whatever, however you would describe it. I've watched a lot of videos of like people going to pawn shops and selling silver and gold. And they ask the people, hey, what's the buy versus sell side here? And they say, we get about 20 sellers for every one buyer.
Wow.
So they are still, so they're buying all that gold and they're shipping it off. They're selling it to one buyer that is buying a ton of it. And that's not a normal person retail buyer of the physical commodity. That's probably working its way up to central banks across the world, right? That are buying that asset. This is all an assumption. I could be wrong, but that's just that's just a theory that I think is highly plausible. So basically what I'm saying here is the value proposition is a sovereign asset that can't be debased, and Bitcoin is the best asset in that class. I think diminishing returns is definitely easily off the table as we see more people understand the value of Bitcoin.
This is so good. I loved your analogy there, or your explanation there for us. That was perfect for the miners and production going up. But I think you talked about the difficulty adjustment there, and shout out to Corndalorian here. Is that how you say it? Corndalorian? Anyways.
Corn
DeLorean. There we go. Sorry about that, Corn DeLorean on Noster. But this is what Forrest was talking about here. And it feels like a mental unlock when you can actually understand the differences there. Like gold's, pretty well known. It's obviously done very well this year. But once you understand the difficulty adjustment, Bitcoin, and how it relates to the supply schedule and the difficulty of, getting more Bitcoin. So that's Vince McMahon, of course, when you understand Bitcoin's difficulty adjustment. So I wanted to share that because I want to just say, like, for anybody watching this who doesn't necessarily have a good understanding of the difficulty, I think that just going down that road is going to tenfold your Bitcoin conviction just when you can understand that. So that's just what I wanted to throw out there.
It's a major unlock when you realize that. And I had that realization when I was getting into Bitcoin, and a friend of mine was like, it's sort of like anyway, a friend of mine was like, I'm going to go out into the logging roads and set up a camp and start like mining gold in the river because it just hit $3,000 an ounce. And I was like, huh. So that means more gold is going to hit the market. Like, he's not the only one thinking of this. This is just some random guy. And then I learned, and then I thought about Bitcoin, and I'm like, more miners doesn't mean more Bitcoin. And it's just like that simplicity, like that right there, right? That's the laser eyes red image of Vince McMahon. That is insane. It's such an insanely different dynamic. There's no other commodity like that. There's no commodity that's like that.
Yeah.
What's this, Rajat?
I brought this up because this is the price of gold in Weimar marks. So what this shows you is the volatility in the price of gold, percentage change in gold price monthly. So you can see the volatility. What volatility does is it scares people.
What's the other line?
The other line is, so the black is the price. The red is
in what?
In Weimar marks.
Oh, gold price. Oh, okay. Sorry. Yeah.
So it's going up, but the volatility is increasing over time. Like you can see here, the volatility is going up. And I think this is what we're going to probably see with Bitcoin as well. The volatility will probably increase. I mean, at times I feel like, maybe the volatility will decrease because institutions, I was talking to you guys right before this, institutions are here, they're going to keep selling, but eventually they run out, right? And so anybody who sold their gold, let's look at one of these prices. So anybody who sold their gold here, so after $100, it seemed like it dipped, and maybe that was like a resistance. It seems like it went down to maybe $80 or so. But anybody who sold their gold at $100, so at the time they probably felt smart. They're probably like, "Oh yeah, I'm doing great. This is a great decision, best decision I ever made. Now I have these pieces of paper that I can use to save for the future." And then eventually it went past $100 and it went to 10,000, and now they're thinking, "Oh, I can only buy like 0.1% of the gold that I could before." And then it goes from 10,000 to 100 or a million. Then it goes from a million to 100 million. Then it goes from 100 million to 10 billion. Then it goes to I think that's a trillion. Yeah, to a trillion, right? And see, this is exactly what's happening with Bitcoin. Yeah. People are thinking, this thing is going to get less volatile because in the last few years, that's what we saw. But I don't know if that's going to be the case. I was talking to you guys about this chart here. So you can see here in 2017, from 2017 to 2015. Let me go down here. So from January of 2015 all the way till March of 2017, Bitcoin basically went up in the same kind of channel that it's going up in today. And I mentioned to you guys that, I don't know, maybe it's going to keep doing this because institutions are here. And Jor was saying, no, it's you can't hold this back for very long, right? So let's say for example, from 2015, January 2015, it was at like $228 or so, 238, 240, whatever it was. In March of 2017, it was up to 1,000. So the people who probably bought here, sold here, thought they were geniuses. They thought they were so smart. And then within 6 months, Bitcoin is or 8 months, Bitcoin's up to 20 grand per coin. So who knows? Maybe that's what'll happen this time. Maybe that's, I mean, I don't know. Maybe it won't do a 20x, but maybe it goes up to 1 million. It adds a zero, and then it drops 80%. Right?
Can you bring that? Sorry, can you bring that chart up again that you had before the marks one?
Yeah.
because this is really how I see Bitcoin. The both the price and the percentage change, like the volatility. This is kind of how I predict it to be too.
Yeah.
Because and again, if you consider it, if you look at this chart and you say, okay, what changed here? Because this is in gold. So what changed? Why would it become more volatile? It's not like they had a bad quarter in sales. It's not like the CEO went off and had an affair with somebody to cause it to drop. The only thing that's causing the volatility here is fiat, the fiat debasement, and the inflation, the money printer. That's what's causing this volatility. The price is going one direction, but people are basing it off of the volatility is strictly based on the fiat. It has nothing to do with like the gold side of this trade. It's all fiat. And I think that something similar has happened in today's version in US dollars. We're going to see something similar to this. And I think it's going to be even bigger in terms of Bitcoin because Bitcoin is the better version of gold.
Yeah. Well, the Weimar marks, what makes them any different than US dollars? They both cost the same amount to produce. And the Weimar mark was inflated away purposefully because in World War I, the German Kaiser funded the war with debt, and it was priced in their currency. So they inflated the debt away. So they basically didn't have to pay anybody any real money or real value to pay off their debt to their own population. Like it was a devastating blow to the people, right, that held that debt and held those currency units. And so the same thing is happening with the US dollar. Like the US dollar has basically funded all of its growth, all of its wars, everything, or the US government has, with debt, right? One way or another through debt. And they want that debt to become worth less and less over time. It's the only way they can afford it. So it's maybe a slower grind. Like this happened over 9 years. It's going to take longer maybe, but maybe we're at this point, right? Like that's the thing, right? Is like trading this, right? Like you cannot look, if you look at that volatility, this is what Rajat was basically saying is with that volatility, you might think you're a genius because you're buying low, you're selling high, but then where is your entry point back in? And if you're not in the position, it gets to a point where it spikes so high that you can't get back into that position. There's no new entry point that makes sense to get back in. So you're stuck. Like you can't trade these things. And that's kind of why like the concept of the debasement trade is in my eyes, like incorrect. Like this is not a thing you trade. You buy the better money, you sell the weaker money. It's that simple. And you just do that for as responsibly and as long as you possibly can, and you will end up being incredibly wealthy because of it over time.
I wanted to actually show the other chart. This is on TradingView for the what was happening in 2017. So exactly what was happening with gold versus marks. So you can see here from 2015. You can see here early 2015, Bitcoin was at like $200 or something like that, and then it went up to 1,000, and then it skyrocketed. And then like this is the important thing: higher highs and higher lows over time.
Exactly. Where's your entry point?
The prices keeps going up. You don't know when to get back in, and you start panicking. That's the worst thing to happen. The worst thing to happen to you is you own Bitcoin and then you sell it because you don't understand it, and then you never get it back. Like the people who sold their Bitcoin. So like I said before, the people who bought here $200, sold here at $1,000 probably felt like geniuses. And maybe for a very short period of time, the people who bought at $1,000 felt stupid. And then their roles reversed. The people who bought at $200 and sold at 1,000 only got a 5x, while the people who held from 200 all the way to 20,000 got a 100x. Is that what that is? 100x?
Mm-hmm.
Crazy.
If everybody understood this that had Bitcoin, they would be so scared of selling their Bitcoin for dollars.
Yeah.
Because anytime you hold dollars instead of Bitcoin, you have the potential of missing out on a rally that pushes Bitcoin's price nominally to a level where the low of the next, the low after that is higher than the high of the previous one.
This was the low after that, so 2018. So it went from 200 to 1,000, and you sold at 1,000, and that's where this chart comes in. The 4-year one that I was showing before, that's where this one comes in. You can see the volatility.
Oh, I think
it's
you
very
got to
suppressed.
switch pages.
Oh, let me switch. It's very suppressed. You can see that here from 2015 all the way till 2017. Very suppressed. It's barely moving. Like, I don't know. This seems way too similar.
It really does.
Right? It seems way too similar.
Except there's way more dollars now.
And there are way more dollars now, yeah.
And that's what I was going to say on Forrest's point about the same thing that happened in Germany back in the day that we were just looking at there. I would actually argue that it's much easier for the governments now to create money than it was then, because at the time they actually had to, they had pieces of paper, they had coins. And in order to get those pieces of paper, they actually had to plant a tree, cut the tree down, process it into paper. Like there was actually some sort of proof of work there to produce bills. So if you look at this and how easy it was to do this, imagine where they're just adding zeros to a spreadsheet now.
Good point.
Like that's point, why they print new papers with new zeros on them.
Exactly.
Now they just add a zero on their spreadsheet. It's crazy.
And so it's not that gold's getting better or Bitcoin's getting better. I mean, I would say that there's kind of two components to it: the money printing, and then gold actually is growing. Like the network of people using Bitcoin, businesses accepting Bitcoin, it's getting more secure as everybody joins. But the main thing that's happening here is that fiat is dying. Fiat is collapsing. I would argue that it's already collapsed based on some objective metrics, including gold going from 35 to 4,200. I would say that that's just the end of the dollar. But there is a point in time where it goes from 10,000 to 10 million pretty quickly. And I feel like that's where we're heading into here with the US dollar here soon.
The dollar is a hot potato currency. It works fine for payment rails. It's not the greatest. I mean, it can be censored. It can be cut. You can be cut off from the SWIFT network, all sorts of stuff. But people typically do use it because it's better payment rails and less of a hot potato than, the Naira or the peso or something. Yep. But it's still a hot potato. You do not want to hold on to that thing because it will burn you. You want to offload it and buy a nice cool potato like gold.
I want to show you guys something cool too. So I was just Googling it quickly, and I saw, I wanted to see what these are worth.
Cool.
Look, you can see 1920s Germany, Weimar Republic, 10-mark banknote, $6.60.
Worth a lot more now.
This one here.
That's a collector's item.
Check this one out. So this is from 1920. This is from 1923. 50 billion.
Oh my God.
1923. So,
and what was that other one? 10?
10 in 1920 to 50 billion in 1923.
So that's the, we can add zeros digitally now, but they're just adding zeros on that paper, on that same piece of paper.
And you know something else that I noticed? Like, take a look at this. So the one that you have here, look at how little there's not that much detail on it, right? Look at how much detail is on this one.
Yeah, it was more cost of ink even.
Yes.
And like the cast or like the print to make it and stuff was more detailed to design.
Yeah.
Yeah.
And like even look at the price. So this one's worth 660 when it's worth 10 marks, while this one's worth 799 when it's 50 billion marks. So proportionately, you're getting less marks.
This one looks like it was made on like Microsoft Paint.
It does.
It looks like shit.
Maybe it's fake.
Maybe.
But I mean, it has. But that's the thing, right? Okay, so that's another little rabbit hole. This might be fake, but it has the same value as a real note.
Yeah.
Because both are worthless.
Yeah. I mean, what's the difference between, the US or like the Fed and all these currency providers around the world, they all just have a license to counterfeit. Like,
yeah.
There's no difference. Like, it's still just money debasement. It doesn't matter if it's done illegally or legally. It's still just money printing.
Yeah.
This is that's crazy. 50 billion from 10.
50 billion.
This is something too that I don't know if you guys have seen this or not, but this is something that they've been doing. River's been doing this in the US. Anytime somebody signs up for an account and gets one there, they actually send them $1 million in Zimbabwean banknotes from a period of hyperinflation in the early 2000s. So it says this is a powerful reminder of how traditional currency is easily printed, making it vulnerable to devaluation and inflation. So they actually send $1 million to new customers just as like a reason why you should have some Bitcoin.
I just Googled it quickly. You can buy 10 of them for $1.69 Canadian. It's not even US, it's Canadian.
The millions?
Yeah.
Wow.
That's crazy.
And again, what's the difference between that and a US dollar bill? It's just belief. Yeah. There's belief that the US dollar has more value at this point than the Zimbabwe one. The belief was broken with the Zimbabwe dollar.
And this is why I always go back to telling people, hey, the Nigerian naira is basically like predicting the future for the US dollar, because they're both the same thing. There's just different people are printed on them. That's literally it. They're both exactly the same. They both have the same value. They're both the same. They're made of the same material, right? So you can see here, one Bitcoin is worth 162 million Nigerian naira. At one point, you can see here, it was 11 naira.
Yeah.
Per Bitcoin, 11 naira per Bitcoin. Today, it's 162 million. That's crazy. And you can also see here, at one point, one Bitcoin was worth, so this is June 6, 2016, it was 116,000 naira. And if I just move slightly, June 13th, it's 140,000 naira. July 4th, it's 192,000 naira. And it just keeps going up, and it moves sideways a little bit from there, but then it just keeps going up. It's crazy.
Well, there's this idea that literally everything, not just dollars, not currency, but everything continues to trend towards the cost of production.
Yeah.
Like everything is going to trend towards there. It doesn't mean that it's going to hit, because there's going to be margin. There's going to be the convenience of buying something instead of producing it. There's going to be scale, but everything's going to trend towards the value of or the cost of production. Mm-hmm. And money or currency, there's very little cost of production that goes into it. And it's better to have money that has a cost of production. Like people talk about the cost of the electricity for the miners and all of this, and it's so expensive and so, inefficient. That is done by design. That is to make money expensive to create. That is purposeful. And so I think one of the best metrics for like valuing gold and valuing Bitcoin is actually looking at what it costs to produce it, and then putting a premium on top of that, because it's the idea of bringing that production to the current present in your own possession, instead of having to go and risk the to take on the risks of producing, right? Of acquiring it through production.
Pretty crazy, boys.
Yeah.
Do we have anything else we want to touch on, or should we wrap her?
I think we're good. I'm good.
I'm good.
One thing I did want to say is that, gold's been ripping quite a bit. Bitcoin is actually still down from 2021 in gold terms. You could get one Bitcoin for 35 ounces, I believe, back in 2021. And right now, as we're making this, it only costs about 31 ounces for one Bitcoin. So to me, if it was me, and this is, I'm not going to give financial advice here. I usually do, but if it was me and I had some gold, I would say that now is probably a good time to trade some of that gold or all of that gold into Bitcoin. And you can always go back into gold later once Bitcoin kind of sees its cycle, which hasn't happened yet. I just think it has so much room to grow. And do you guys have any thoughts on that?
It's an interesting perspective. It's gold could be almost like people that trade cryptos, they use USDT as their stable coin to trade out of their position. If you're think that you have some advantage to be able to trade something as crazy as Bitcoin, maybe gold. Yeah, maybe gold is your stable coin. I don't know. There's an argument to be made there. I think the vast majority of people's energy is better spent honing their craft, working on their passions, and just holding Bitcoin. But there's potential argument to be made there.
Yeah, I was just kind of talking to like let's say there's somebody out there who understands Bitcoin, understands gold. They have like an equal split, maybe 30-30 gold, Bitcoin percentage wise. I just think that what we've seen versus what I expect, I think all three of us expect in the coming years, it's probably a good time to shift some of that into gold. You can always go back after, but it just seems like Bitcoin has way more room to grow right now compared to gold.
Absolutely. Yeah. And both of them will do fine nominally because, as we've discussed, the dollar's collapsing. So both of them I'm sure will do fine nominally, but percentage wise, Bitcoin has way more potential.
Yeah. Okay. Well, thanks, fellas. A couple things before we go, like usual, that QR code beside Rajat's head there. That is our Maple Bitcoin reserve. And unfortunately, you can't send gold. That's one of the main knocks against gold, is that you can't do things like that. But we do accept satoshis, and our address here is maplebitcoin@coinos.io. So you can scan the QR code, you can type it in there, whatever is easier for you, whatever's better. And we also have a new school community that you may have heard us talk about before. We have over 165 members in there now from across the world. We want to have a couple of Bitcoiners in every part of the world, every corner of the world in there. There's a ton of exclusive content if you're looking for retirement projections, if you're looking for better ways to secure your Bitcoin, manage your private keys, all sorts of discussion related to Bitcoin, difficulty adjustment. We had a couple of really good in-depth discussions on Bitcoin and the difficulty adjustment, and that is the place to do it there. So anything else, boys? Oh, you got her up there, Rajat?
Yeah, I got the link for this community. So just scan that. Scan that. You can join on Friday for our happy hours.
Yes. So we do our
extra content.
Yes. Yeah. If you're anything like us and you're just kind of getting into Bitcoin and you're just obsessed with consuming right now, I think the Maple Bitcoin School is going to be a great place because there's a ton of stuff in there for you. So if you're a Bitcoin content addict like us, then that's a heck of a spot. Plus you get to meet other Bitcoiners, which is a definite upside. So thanks, fellas. Good conversation. We'll talk to you in the next one.